Welcome to this screencast. We're looking at private limited companies, which is abbreviated as LTD. The first thing is that this type of ownership structure of business gives you limited liability. If a business is forced to close down, the investors are only liable up to the value of their investment. What that means is that the investors, they own, let's say, 20% of the business. If the business closes down, its value has become zero. So owning 20% of zero means your investment is now worthless. It's worth £0. But you're not losing any more than the money you've put into the business. You're not at risk of having to sell your personal assets in order to pay back the debt of the business. And that's because the business is incorporated, so it exists as a separate legal entity than their owners. And in order to be a separate legal entity, you must register the business with the government. So there is an organization, it's a government called Companies House, and they keep a record of all the businesses that exist in the UK. It's not impossible to, as an individual, as the owner of a small business, it only costs £100, but you cannot just start trading before having done this. Well, unless you start trading as a sole trader first and then convert your business into a private limited company. There's going to be some requirements in terms of how the business is set up, and the directors of the business, their name will be given to the government. In addition, there's also a requirement to pay an accountant to do the tax. While a sole trader could do their own tax return, even if they didn't have any specific training in being a chartered accountant, as a private limited company that is incorporated, the way you do your tax return at the end of the year, the way you do your account has got to be much more precise. And if you are not yourself an accountant, there will be a cost of paying an accountant to do this for you. The word private is about who can buy shares in the business. A private limited company is private in the sense that not any member of the public can become a shareholder. To become a shareholder, you have to be invited by the existing shareholders to join them. One massive benefit of trading as a private limited company is you can get investors into the business. You can tell an investor, are you interested in buying 10% of my business? That's what you see happening on Dragon's Den, for example, and then you see them arguing about if I give you that much amount of money, at this moment in time, that much amount of money I estimated to be worth 30% of your business. No, I think it's worth 25%. And then they come to an agreement. But the key thing here is that by attracting investors, you are able to get a big influx of money into the business, which usually will be invested into a project in order to get the business to grow and become even more successful. Thank you for listening to this screencast. I look forward to reading your answers.